Today we're going to talk about FHA guidelines for 2026. We'll talk about down payments, we'll talk about credit scores, and we'll talk about qualifying ratios. We'll also talk about a couple of misconceptions out there about FHA loans. But let's start with the basics. First, why would you even want an FHA loan? Why do people take them? FHA loans are for anyone needing flexible rules. Those flexible rules have to do with your credit, with your down payment, and with your income. They can help you buy more house with less cash. Now, as long as you plan to live in the house you buy, you can use an FHA loan. So let's talk about the guidelines in 2026. The minimum down payment for an FHA loan is 3.5%. That's lower than most conventional loans. You can pay that down payment using savings, a gift from a relative, or grant money. So for example, on a $300,000 home, you would only pay $10,500 for the down payment. That's very affordable. And like I said, the down payment can come from savings, a gift from a relative, or from grant money. Our bank has a $10,000 grant that we offer in 44 states. So if you'd like to know more about that, just hit the button in the video description and you can book a free call with me. All right, credit. You need a 580 minimum credit score for a 3.5% down FHA loan. Now, sometimes the factors that gave you that 580 score in the first place may make it hard to qualify for a mortgage, but it's absolutely worth looking into. It is possible to get an FHA loan with minimum down with a 580 credit score. If your credit score is lower than 580, it gets a lot tougher to get a loan. You'll need at least 10% down, and you might even need to step aside for a while, take some time, and work on your credit. You can watch a video on my channel that tells you how to raise your credit score. Next, let's talk about qualifying ratios. Banks use debt-to-income ratios, and a debt-to-income ratio is a way that a lender can tell if you have enough income to make your payments. They simply divide your credit into your income, and the answer is a ratio, a debt-to-income ratio. It's pretty simple. Your debt includes your new housing payment, your car loan, your student loan, any other consumer debt that you might have. Your income is your gross monthly income before taxes. Got it? So you take all of your monthly debt payments plus your house payment and you divide that amount into your monthly income. That gives you the debt ratio. All lenders use some kind of debt to income ratio, and FHA lending allows a higher debt to income ratio than most conventional loans. That means FHA gives you more buying power. It can help you buy the house that you really want for the long term. So that's another advantage to FHA. Okay, so what kind of house can you buy with an FHA loan? Like most loans, FHA allows you to buy a 1 to 4 unit property. Homes can be single family, they can be condominiums, they can be townhomes, 2 flats, 3 flats, 4 flats. But they stop at 4, they won't let you have a 5 flat with an FHA loan. And you must live in the home as your primary residence. Now, before we get into that, I want to look at 2 areas where FHA loans are often misunderstood. So far, we've covered down payment, credit, and income for FHA loans in 2026. Now, let's discuss mortgage insurance and appraisals. And by the way, if this information is helpful, please hit the like button and subscribe to this channel. So let's start with mortgage insurance. FHA loans do require mortgage insurance, and the mortgage insurance has 2 parts. First is the upfront mortgage insurance that you pay at closing. It equals 1.75% of the loan amount, and you can pay it in cash if you want to at closing, or you can finance it in. Most buyers finance it in. They add it to the loan amount. Second is a monthly mortgage insurance. It's recurring, it's a lot lower, and it's paid every month. So that's a lot of mortgage insurance. And you might ask yourself, is spending all of this money on mortgage insurance really worthwhile? To answer that, I think you have to ask another question. If you need an FHA loan to qualify, is buying now worth it before prices go up even more? I think yes, it is. So if you need an FHA loan to buy a home, it's probably worthwhile. Now let's talk about FHA appraisals. FHA appraisals tell the bank the value of the property and what kind of shape it's in. They research other homes around you that have sold and they come up with a value for the house that you're buying. They also focus on safety issues, problems that you, the buyer, might want to have fixed before closing. So let's talk about some of those safety issues. Missing handrails have to be replaced, exposed wiring has to be fixed, broken steps have to be repaired, well and septic systems have to be in compliance. And the appraiser actually climbs up at least head and shoulders into the attic and checks that out as well. So those are FHA rules, and I don't think they're bad. They're in place for a reason, and they actually protect you and your family. So FHA appraisals provide the market value of a home, and they also help ensure that the home you'll be buying and living in is safe. Those are good things. So that's appraisals. Now, in order to get started, you'll need mortgage pre-approval. You can check out this video right here about how to get a pre-approval letter. If you're ready to go, you can click the link below for a free consultation. My team writes a lot of FHA loans. And if this video helped you, please hit the like button and subscribe to the channel.